Morning, everybody. Thanks, Adrian. Our midweek workshop. As you know, this is a slightly shorter time for myself in terms of what I can give you because we're halfway through the week, obviously. Morning, Neil. Morning, everybody. We've got a bit of volatility. Wow. How you guys been getting on? Making sense of this all? We have been talking about what's going on in the markets for the last couple of weeks in terms of really questioning what's going to propel this market higher. I'm not really tempted to blow my own trumpet here, but I mean, we have been saying that this is something that has been brewing up for a while. We've said that having raw optimism is not a reason to buy the markets when it's rallied from its lows from early June. And I think we've certainly been proved right here. Obviously, obviously the recent events have confirmed what you and I have been talking about, really, which is useful. Hopefully, we've avoided some of the pitfalls of getting sucked in. I remember speaking to you on Monday at the workshop here. Some of the markets, some of the participants, economists were talking about hitting all-time highs, etc. And I've got a report from the FT. I haven't got it on screen, but the headline was, and this was the 18th of October, what's that, 6 days? 6 days is a long time in the markets, isn't it? US rally spurs talk of all-time high. Momentum is a powerful force. US stocks have smartly outperformed analysts' expectations. Please read the tea leaves, not the reports. Read the markets. The saying that the market has spoken, were you listening? It's all in the price, everybody. It is all in the price. When we look at some of these markets, we can see, let's just get my little summary sheet and I can, when I look at, for the likes of, and let's use the symbols that you guys use, the FTSE, obviously a significant sell-off. We've actually been performing better than the US, though, of late, and I think I mentioned this on Monday, but we've literally gone from the top of our recent range all the way down to the bottom. Keith, Google said it all. I mean, what a balls up that was, Keith. No, I quite agree. But Keith's just saying Google said it all. The fact of the matter is we've had Google, we've had Microsoft, we've had GE. What did we have yesterday? We had... I think we had DuPont, there's a list of them, Dow Chemical, Xerox, UPS, 3M. Everyone was telling us these companies were doing really, really well. Q3 was going to be fantastic. I think what's happened is that we've actually suddenly decided, my God, actually it's not right. I think investors have gone running to the hills. So I'm going to use this risk on. It's not. It's the risk off trade yesterday. So you've seen bonds rallying, you've seen stocks falling, you've seen the dollar recovering, and you see commodities coming off. Crude oil, look at crude oil. Wow, fantastic moves in crude. Let's have a look at we will have a look at crude oil. This is WTI. I'm only looking at the longer term charts. We've broken the lows from early August. Who's noticed it at the pumps? No one. No. As Adrian said to me this morning, he said we should just put a big sign up. Just say, oh, you have? Will, what pump is that? You obviously have a special pump in Surrey. No, it's still, diesel's still around 140, but it is going to come lower. I'm sure they'll justify something. There'll be some weird explanation, but it just goes to show you, this is the WTI, not the Brent. This is the sort of slightly cheaper crude. Shell M4. Okay, 5 litre column. Okay, yeah. Sound cheap. There you go, Roger. Roger's got it. There we go. Roger's got it. Anyone can beat 133. That'll be the benchmark for now. I think it probably will head down there. I mean, we've had a significant fall, $12 from the peak. So but it looks like it could fall further, doesn't it? I mean, we could end up going to the sort of June lows, down to sort of just sub $80, which would be incredible, really. Bearing in mind we were hovering around $100 on WTI and 120 on Brent. 143. Steve, you must live in Knightsbridge. Steve lives in Yeah. So Jeremy wants to know, where was 133, Roger? We'll all head there. It's Ochtermuchty in Fife, Jeremy. There you go. I know. Roger says outside Salisbury, so there we go. Yeah. Interesting. A lot of news overnight. Just quickly looking at our data. If you remember, we mentioned this manufacturing PMI coming out of China. We said on Monday that Jeremy Hunt, he's just okay, well, yeah, that's not a million miles away. We did say on Monday that the Chinese economy was improving. There was a feeling, despite the 7.4 number, the president of China Republic basically said that the numbers were improving. Do we believe everything the Chinese say? Well, this is independent report. This is HSBC's, and this is followed very closely. So 49.1, still in contraction, but it's a better number. And for that reason, you will see headlines like this in the FT, Chinese flash PMI, that's flash means the preliminary number. PMI is the Purchasing Managers Index, showing signs of recovery. And actually, here you go. So a reading below 50, it still indicates contraction. Excuse me. But it is a better number, nevertheless. So that sort of set the tone this morning, along with the first sort of mildly positive numbers from Facebook. If you'd invested in Facebook at $38, you're probably not that happy still. Facebook, I'm just looking at my eSignal feed here, went out at $19.50, but in fact, it's traded 8% higher overnight. So that's interesting. So it's done pretty well. So the turn is slightly better. Asia had, whilst it was down, tracking the Dow, and the Dow had an appalling day yesterday, as we all know. I'll just click on this other headline here. US results raise fresh fears for the economy. What's worrying now is that, whilst everyone was talking about how bullish the market was, and as I said, that FT report from the 18th saying US rally spurs talk of all-time peak, we've gone from pillar to post. The fact of the matter is we have to deal with reality, not blind optimism and what people would like to happen. The fact is markets reflect what's going on in the underlying economy. Sure, stock markets can try to predict positive news a good year and a half, 2 years ahead. So sometimes, we can be in the midst of a battle and we can be planning the outcome of the battle, as it were. So not always as obvious as you may think, but I do think on this occasion with the presidential election, got a lot of reasons. What are the reasons to buy the market? What are the reasons to sell the market? And again, this is not really to help you guys in the very short term with your micro trading during the day trading, the swing trading, continuation trading that we get up to, but at least it'll give you an understanding of where the bigger picture is. And as these trends turn, we can see where to focus our attention. A lot of great moves in commodities. Adrian, I'm sure, has mentioned gold. I'm sure he's mentioned crude. Excuse me. Will, we were talking about, the volatility in these markets, and some of the commodities are just fantastic. And I know that we discussed that on Monday, and, to see the sort of moves we mentioned on Monday that crude was off 1.8% last week. Gold was off 1.8% last week, and yet stocks were sort of pretty muted. And we've had the report out from on Bloomberg about the drop in volatility in currencies. Hey, listen, this all provides opportunities for us. The big problems really are for the banks and the desks that do what are called carry trades, where they use a funding currency to target to then sell it and then invest in a high yielding currency. But all those people that have done that, unfortunately, have lost a lot of money because the target currency has lost value. So anyone doing the carry trade with the Brazilian real, with the Aussie dollar, it's been a painful year, really, and that's one of the reasons why volatility and volumes in FX has come off a little bit recently. Yeah, so really, as I say, poor corporate earnings and outlooks, presidential election, and the fiscal cliff. I can't think old Barack Obama, despite the fact that he did pretty well in the last televised debate on Monday night. I can't believe he'd be too chuffed with reading the headlines this morning following the rout in the stock market. But that, again, on hotter than the heels of the 205-point fall in the Dow Friday, that is, that's been eclipsed, as I say, by yesterday's fall. So not good. I was reading about Dow Chemical, for example. They're talking, they made some announcements overnight. They're cutting 2,400 jobs, which is 5% of their workforce. They're shutting 20 plants. They've identified 7 plants being closed, 4 in Europe, 2 in the US, 1 in Japan. And I think this is just, confirms what, any sensible person could assume, reading the tea leaves, that, things are not well. The European economies, the Bundesbank has got quite bearish on the German economy and is warning of a significant slowdown there. We have to deal with reality, and the reality is that we've had a significant shock to the financial system over the last 5 years, and we're paying the price for that. It is an L-shaped recovery, whichever way you look at it. Certainly in the Western economies, and that's what we have to deal with. It's difficult when you look at the extra problems that happen in Europe with regards to all the sovereign problems in the likes of Greece, Spain, Italy, Portugal, Ireland, etc. So this is going to be a long grind out, but opportunities for us, there are plenty. So please keep tuned in to these workshops to hear what's going on. Let's just quickly summarise what we're expecting later on in the day, because we're in the midst of all these European flash or preliminary manufacturing PMIs. The big one is the German one coming out in 1 minute. There we go. So watch the euro for now. We're 129.77 and change. That's backing away from that 130 level. I still fancy it's probably going to head lower myself. But that's coming out literally in a nanosecond. We then have a combined bit of data put together for the whole Eurozone group, which is published at 9 o'clock, so that takes into account all of them. We've got Draghi speaking at 12:45, as one of you kind gentlemen reminded me on Monday, which I missed. And that is 2 speeches. He's talking at 12:45 and 3. Well, anyway, he tends to say something quite... that tends to stir the market, so be aware of that. Then we got the Fed statement at 7:15 tonight, not expecting anything. Please, if you've been having some of the fun that we have over the last couple of days, please, you shouldn't really be trading at 7:15 at night. I would hope that you've turned your screens off, you're at the pub or relaxing in some way. Thursday, we've got the durable goods and unemployment claims. Remember, durable goods is a key bit of data after the non-farm payroll. It's probably one of the more closely watched bits. And then, obviously, Friday, we have we've got our GDP data in the UK. Just please, for God's sake, watch out for that. That's Thursday at 9:30. I nearly forgot. And then, obviously, we've got the US GDP on Friday. That's the advanced one as well. That comes out at 1:30, looking for a slight improvement there. Good. I've rushed through it because there's not a lot more to say. We've been expecting a bit of a pullback. We're in a phase of sort of trend change, possibly. Certainly the dailies, the 240s are turned down. The dailies are showing strong signs of it. If we look at the charts on the key indices, if I go to the Dow, and I'll go to the daily chart here, you can see this is showing a slightly different picture to that of the FTSE and the DAX, but we've really ruptured at significant levels here. No longer are we making higher highs and higher lows. We've taken out this low here, and that is a significant move over 3 days. Possible targets, obviously, you can see on the daily, 13,034, so a little way to go just yet, having settled at 13,114. Strange, bearing in mind that 6 days ago they were talking about all-time highs. There we go, odd, eh? Other than that, let's see if I can get the DAX. All I can put up is the DAX futures. I know you don't necessarily all get that, but this sums it up. We're in a lot tighter range. Europe put up a better performance yesterday than the US. I think we stood aside and watched the S&Ps crumble. I don't know whether Adrian showed you the 15-minute chart on the E-mini on the S&P 500. It was just one long straight line. If you got onto that baby and you followed the the rules, you could have made a lot of dough. A lot of people were trading that yesterday. It is, all the action is down to the US. You know, we were also talking on Monday about some of the trends that you see in terms of correlations between markets and, you know, and patterns that occur. Some people were sort of following moves overnight in the currencies when there's a lot of action in the Far East. Now all the focus is on the US. It makes sense, really, to be sharpening our pencils and waiting for moves in the US come sort of midday onwards when the US desks come to light. The stock market opens as we know at 2:30 in the afternoon, so it doesn't give us a lot of time. Forex trading, big moves always happen from 7 o'clock in the morning in the following the opening of London time. But you are getting quite a lot of impact from the US now, which hasn't always been the case of late, but that is definitely something that's occurring now. And that's it, pretty much. So, yeah, things are changing, aren't they? And lots of opportunities out there. Keep to the rules. Stick to what you know. Don't be fooled by reports. Nothing is gospel. The price action is king. That is what the market is telling us, not what the reports are telling us. So please avoid listening to too many or reading too many reports. There'll always be someone arguing it going up, arguing it going down, arguing it going sideways. You should stick to your own rules and follow those as closely as possible. That's it. Thanks very much for listening. 25 to 9. The data, it does not look to have been particularly brilliant because the euro is coming off. Manufacturing, has anyone seen the German PMI? Let me just quickly refresh this and we'll get a... Okay. That's not particularly good, team. That's probably the reason why the Bundesbank is not particularly bullish on the German economy. 45.7, so significantly lower than expected. Yeah, I've got that, Steve. That's great. Yeah, 45.7, Jared. That's great. Alan, yep, see you, mate. Thanks very much for listening. Obviously, you can continue. I'm going to duck out now. I'll put you on hold and pass you back to Adrian. Good luck to you for the rest of the week and speak again on Monday.